First Solar reported earnings last week, and I'm finally getting a chance to cover their earnings results, but this is really one of the best solar companies in the world today, as a lot of their solar competitors have fallen off of a cliff, especially in the residential solar market. First Solar has maintained not only its market position, but also a lot of the value from an investor perspective, and there's a number of reasons for that. The first is that this is primarily a utility scale solar supplier. So they're not going to have a lot of the same ups and downs from a quarterly basis as a lot of their residential competitors. So residential solar is going to be reliant on policy changes, particularly in California. That was the big change in 2023, moving from net energy metering 2.0 to net metering 3.0. And that is going to change the sales trajectory and the margins of the solar industry pretty quickly. On a quarter to quarter, even month by month basis, there could be a lot of changes. Utility scale projects take years to build, so you're going to need a lot more sustainability and predictability in not only the policy environment, but also the contracts and the interest rate environment that goes into these. So a lot fewer surprises for the industry, and First Solar has contracts that go out multiple years to sell solar panels to utility scale developers. So that's why there's much more predictability in their results, and one of the reasons that they've held up relatively well over the past year. So I want to dig into the results, give some context on what the valuation looks like, because the other thing that is a little bit confusing with First Solar right now is they're getting a massive benefit from the Inflation Reduction Act and all of the subsidies that went to US solar manufacturers, US renewable energy manufacturers. So that's been a huge boost to the bottom line, but I'll try to put some of that into context. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at valuation just to put some numbers to that before we get to the actual results. Here you can see First Solar's stock price, about $158 per share over the weekend, and market cap just about $17 billion. So I just wanted to put those numbers into some context before we get into earnings per share results or the cash that's on the balance sheet, so that we know kind of what to compare those to. This is an overview of the financial results: 28.3 gigawatts of net bookings in 2023 and sold 11.4 gigawatts. So demand is exceeding supply, at least right now. The other thing is that earnings per share, $7.74. That puts the stock at about a 20 price to earnings multiple on a trailing basis. And then they also have $1.6 billion in net cash on the balance sheet. So this has always been a company that has a really strong balance sheet. But I'll try to put some context to how this earnings number has been inflated by the Inflation Reduction Act, at least recently. So this is the big number right here, $687 million in Section 45X tax credit sales. So that's going to be sales that are going to benefit the company now, but maybe aren't quite sustaining long term. From a manufacturing perspective, this is where First Solar is always making steady steps in the right direction. 9.7 gigawatts of Series 6 produced. They are now moving to Series 7. That was 2.4 gigawatts, and they're at 22.6% efficiency. When I started covering First Solar, we were talking about 11, 12% efficiency. So they're just phenomenal technology improvements over the last decade. But there's been a lot of ups and downs in the process. And this is the big thing. Remember I mentioned the 11.4 gigawatts of sales. They're expecting to be at 25 gigawatts of nameplate capacity in 2026, including over half of that being in the US. So this is going to be a growth company in manufacturing. Yes, there's a huge benefit from tax credits right now, but we are going to see operating leverage and revenue growth over the next few years as this capacity ramps up. So they're going to be more than doubling capacity just over the next 3 years. This is a look at that backlog: 61.4 gigawatts coming into this year, sold 11.4, added to the backlog. And at the end of 2023, you have 78.3. Pace has slowed down a little bit. At the end of February, you're looking at 80.1 gigawatts of backlog. Here are the earnings numbers. These are going to be a little bit volatile over time, so don't be too focused on any one specific number, but $1.16 billion in sales, gross margin 43.3%. This is better than I've seen in over a decade. In the early 2010s, late 2000s, First Solar would be in excess of 50% gross margin. They obviously haven't done that for quite a while. as the industry has gotten a lot more competitive, but this is a really, really strong margin, helped by those subsidies I talked about earlier. And then net income of $3.25 per share. That was obviously a great quarter given the full year of $7.74. Balance sheet, always a point of strength for First Solar, $2.1 billion in marketable securities and cash. They do have a little bit of debt, but that's $560 million. So that's what leaves you with the net cash position. This is a look at the expansion plans. And this is something that has actually increased a little bit over the last few years. They've been increasing the amount of capacity that they're adding in a lot of these different locations. So 2023, about 16.6 gigawatts of capacity to end the year. And then they're adding capacity in the US primarily over the next couple of years. And that's going to be mostly Series 7 as well. So their latest production modules. Guidance is up next, and you're going to see, obviously, the production growth is going to help drive a little bit of revenue growth for First Solar. So that's going to be positive. 28.2 cents per watt global average sale price. And the cost to produce those panels is going to be about 18.7, 18.9 cents per watt. This is, again, going to be a really strong margin. And the other thing that we've seen is these average sale prices have stabilized and even at periods gone up over the last few years. So we aren't in a situation with the solar panel industry where we're going to see a reduction of 10, 20, 30% in prices year over year. They're starting to really stabilize and differentiate based on things like technology. That's why that efficiency number that I talked about earlier is so important for First Solar. So costs keep coming down and selling prices maintain some relative strength that should be really positive for margins and profitability. So here you get to the guidance for the full year. Net sales, $4.5 billion about. Gross margin is going to still be in that 40% range, so $2.0 to $2.1 billion in gross margin. And earnings per diluted share of 13 to 14 cents per share. Now, here's where I want to point out some of these subsidies that we're going to get. Operating income of 1.5 to 1.6 billion. That is inclusive of 1 billion to 1.05 billion in Section 45 tax credits. So about 2/3 of First Solar's profitability is going to be because of tax credits. That makes this $13 to $14 in earnings per share look a little bit inflated, really inflated. We're going to be more like $5 per share if you're looking at it without these tax credits. So this is one of the things I think investors need to balance is what's sustainable and what's not in the solar industry right now. Because at the current stock price, this gives you about a 12 times price to earnings multiple at the midpoint. So that looks like a great value, but some of these tax credits are not going to be something that you're going to want to count on long term. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So First Solar continues to be one of the best companies in the solar industry, just a really steady performer. Like I said, I've been following this company for well over a decade now, and they just keep making steady improvements. And what we've seen over the last 3 or 4 years is they're expanding their capacity as they've seen that some of these technology improvements that they have, some of this differentiation they have on the thin film side of things, is a little bit more sustainable than it maybe was in the middle 2010s. That was when you had a lot of low-cost polysilicon manufacturers coming into the market, just producing a commodity panel and really eating into First Solar's price advantages. That has kind of reversed as technology has become more important, as reliability has become more important. And so that's why you have a massive, massive multi-year backlog of demand for First Solar. It's why they continue adding manufacturing plants. I think this is just going to be a steady growth company, a steady performer in the solar industry. Not quite the same value as you may have gotten a few years ago, because if we adjust for some of those tax credits, the price to earnings multiple is going to be more like 20 or 30 times. That's pretty expensive to pay for a company like this. But as a shareholder, I'm just not doing anything. I'm just going to allow the company to execute this growth plan year after year. I think we're going to see a lot of operating margins. But if you're a buyer of the stock, I would be a little bit hesitant paying these prices, given the uncertainty of how long some of these tax subsidies are going to last. But overall, a lot to like about First Solar. I think it's still one of the best companies in the solar industry today. We've seen that over the last 6 months to a year as a lot of other competitors have really collapsed. But what do you think about First Solar stock? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.